Good morning, traders. Welcome to Friday of this beautiful week, of the first week of the year. A lot of people will be coming in next week for their first week of the year, but it's kind of the first full week at least. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check what the news is so we know what's going on and when. We don't want to get stuck in the news or anything like that. That's never a fun situation. So looking at the news calendar for today being Friday, we do have non-farm payrolls at 8:30. The forecast is 71,000. Previous was 245,000. Big difference there. Unemployment rate, we've got a 6.8% forecast versus the previous 6.7. And that's really about it. We've got some medium news announcements starting off earlier this morning at 8:30 along with the non-farms, but let's be realistic. Nobody's going to care about anything but the non-farm on unemployment. Going beyond that at 10 o'clock, there's some minor news. 11 o'clock has FOMC member Clarita speaking and 1,300 U.S. Baker Hughes oil rig count, but CFTC speculative net position stuff usually doesn't do much for the markets, and then it heads off into the weekend. So there's not really a whole lot, but all of the big news clumping together this morning to potentially get things rocking and rolling. So, I guess with that in mind, let's jump in. So today's date being 1/8/21. Let's take a look at some charts. Bulls have had an incredibly strong rally to the upside on the NASDAQ. And it just keeps going. It's starting to turn into Bitcoin at this point. We have a very, very good move back to the upside, and all things considered, it has finally made its way back up to all-time highs, and we're right around the corner from 13,000. Typically, the biggest days that are movers happen to be on Fridays. Those are usually the biggest moving days. And what better time to potentially have the biggest moving day of the week being on a non-farm payroll Friday with low volume because everybody's still kind of in and out with the vacation stuff or holiday stuff or, staying home stuff, whatever. So it's a little bit of a different scenario this time around again. I know we keep saying that about everything, but it's kind of a fresh start. These are market territories that we really haven't ever been in before. So it's kind of interesting. These all-time highs are really, really far up, but look at the amount of distance that they put in when it takes off. It's incredible. So buyers will be looking to buy pullbacks. Nobody really wants to buy up at 13,000, but if they can get a dip back down to like 12,910, then things become a little bit more interesting to buy into the L1 dip for a continuation move back up, probably back up towards 13,000. Over on the S&P, we have a similar situation, but with a triple measured move to the upside completing. And with a triple measured move to the upside completing, that's creating the top of a measured channel as well. That causes some problems. There's obviously some issues here in terms of location. The S&P was kind of the big, strong one, and we might see S&P 4,000 sooner than later. But realistically, as it stands, this is a situation where we're hitting a lot of objectives. We're at the top of a measured move channel. We're at a triple measured leg up. We're at a brand new high after completely falling apart on the sellers. Buyers are going to be looking to buy pretty much every pullback, but they're not going to be looking to buy breakouts. Not way up here. So it's a lot more likely that we see them trying to defend these pullback areas. 3790 would be the nearest, 3770 below that. And it kind of depends on where the channel low, or in this case, the channel midline comes into play. But again, with this kind of movement, you would expect to see either a very shallow pullback and continuation where it just keeps screaming higher, taking notes from the NASDAQ, or what's usually more likely, at least on the S&P, is we see them hit major objectives and pull back towards a structural level of importance. That might be the midline, it might be a lot further down to the lows, but either way, it's really far up and it's tough to want to be a buyer. And then good old gold flushing down through the lows. They finally filled the gap. None of that weirdness of coming a few ticks away. I think they missed it by like 11 ticks or 10 ticks. Not anymore. It finally completed the job. And speaking of triple measured moves, we have another one here. Gold, nice drive down, secondary leg down, and finally led into an impulse third leg down. That's what closed the gap. but it hit a measured move perfectly. So this move down, although it looks really, really strong, don't necessarily get caught up in that, because that might just be a false sense of strength. If we look at the overall volume that happened down here to see if anything necessarily stands out, there were some big volume nodes around the lows that would suggest profit taking, and it was enough profit taking to bounce the market back up. So if the market does start coming back down again, that's going to be the zone of interest where the market might start bouncing around and once again start having difficulty breaking lower. That's what we saw the last time, where it just got stuck for an entire day trying to move down. The gap's closed and all of that's finished, so that's always a good sign, but we're just like before with the triple measured moves. We're hitting major objectives, and that's going to cause some issues to see this continue. Over on crude oil, it's continuing to rally to the upside. Very nice momentum higher and a really nice channel working up with this spike and channel move. Buyers are obviously buying shallow pullbacks. They're buying everything they can get their hands on. But realistically, you know, where it stands, it's really aggressive. This is the zone that we were talking about for a while that buyers are going to be taking profit in going into the 52s. So there's some major areas up here, and noting that 52s are right near the top of the channel, that's the potential top of some major resistance. Everything coming into play all around the same area. That's usually not a coincidence. So something that we might want to keep our eyes on. But overall, it's still going higher. It's just more likely that buyers are going to want to buy a pullback. Nobody really wants to buy up here, hoping that it goes just a little further, but have to risk all the way down here. A lot of traders would rather buy down here, risk to here, and make up here. Totally different scenario. So it's just really expensive up here. Not that the bulls can't take it further, but we're hitting objectives up in this area. Over on the euro, we have some, well, pretty interesting movement. They closed the gap, but never made a new low. I know they were very close together, but it never made a new low. So the gap is done. No new low has been made. Sellers still have a descending wedge working its way down, and it's likely that if the sellers are going to try, they're probably going to pressure into that low area at around the 275s. If they fail, though, then the top of falling resistance is starting to come into play. And realistically, the whole way down, we've seen some pretty nice MACD divergence suggesting that this is a weak low and potential for a bounce back in the opposite direction. It doesn't mean that sellers will be done. It's just usually more indicative of sellers not wanting to sell at the lows anymore. They're getting out of the way. They sold back here. Now they're stepping aside, potentially looking to reload back when it gets into a favorable price. Because, well, as it stands, it's not really at a favorable price. It's not really anywhere. We're just kind of hovering in the upper third of this wedge. It needs to go just a little further. And then the freight train that is Bitcoin, this thing just keeps screaming to the upside. There was a big flash pullback last night that dipped down into the 36, well, we'll just say 37,000s, and then popped all the way back up to where it is now, 41 going on 42,000. This thing's insane. It's starting to get very, very close to the top of the channel. There's a lot of areas of resistance up here. And just looking at this from a realistic standpoint, eventually these types of markets run out of steam. Now, I'm not saying this is the top by any means. There's still chances that this could go to 100,000. We know how Bitcoin operates. But realistically, we do need to kind of keep in mind that this isn't the time to be entering new long-term positions, right? This is the time when a lot of traders will want to enter long-term positions, but this is not the time to be entering into long-term positions. It's not cheap. It's way expensive. Buying way up here is nothing more than FOMO. So this is a better place where if you're already long, this is a place where taking profit would make sense, or just, you know, the good old hodl. But I mean, well, as it stands, this is a tough spot to be initiating new long-term trades, which means that if it's going to keep going higher, it's more likely just to squeeze. And, well, with squeezes on Bitcoin, those things can go nuts. So just be a little careful on this one. It could be interesting. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let those winners run. I hope you have a fantastic weekend, and we'll see you all back on Monday, ready to rock and roll again. Have a good one. We'll talk to y'all later. Thanks.